Welcome to Power Charting. I am your host, Bruce Frazier. We are shifting gears today. We are going to delve into the world of chart reading the Wyckoff way, being able to dig into the Wyckoff methodology, what it's all about. This is really where the mastery is, the skill sets, the fun of Wyckoff is in reading these charts. We will start with a Microsoft case study and do a number of them over time. Many of you have asked for this, and I am here to fulfill that for you. This is just good practice. Practicing your chart reading is a great essential tool, even if you have a number of other approaches, indicators, and so on. Being able to read the bars, read the charts in a Wyckoff way, I think is second to none. It's the way to do it, and I'm here to prove that to you. We will start with a stock market update and then get into our case study. This all derives from the idea of the great philosopher Yogi Berra. You can observe a lot just by watching, and that is true of stock charts. There's so much information in the essence of the charts. Wyckoff called it tape reading. Reading the bar by bar, reading the structures, reading the flow of information as it unfolds is the absolute best tool there is for determining the present position and the likely future direction of stock prices and indexes. Here is just a summary of the things we're going to talk about over time. Keep in mind that we did this for 30 years in the Wyckoff courses at Golden Gate University, where we used Mr. Wyckoff's own words and analyzed bar by bar these different time periods in the markets and taught the method of tape reading, as it was called by Richard D. Wyckoff. This is the study of price action on the stock charts using bars and volume and point and figure analysis, and to determine the goal, to determine the present position and likely future direction of stock prices from the data on the charts. So getting as close as we can to the actual events that are occurring is looking at the price itself. This is done with the analysis of bars, bar by bar. We look at day by day, week by week, intraday, and I ask the question, is tape reading a lost art? Is it something that really just doesn't get done anymore? And is there anything better than tape reading? Well, over the weeks ahead, I hope to prove that to you, that tape reading is something you can do it at a level of mastery, and be very successful with it as an investor / trader. Okay, with that, let's get started. We are going to do stock market analysis first, just looking at the S&P 500 at this time. And you can see here this update, which is through the 1st of March, yesterday. We talked about it at the time that we went up into this resistance zone, which was defined by the May-June high. And we had a point and figure count objective that was derived from this accumulation structure back November to September. It fulfilled when it went up to the 4,200 area with a count 4,100 to 4,350. I would have preferred, and I've said this before, that we'd been able to take out the August peak. That would have been a classic sign of strength. We have not gotten that. Therefore, we then had a pullback. Here you can see stocks above their 50-day on the New York Stock Exchange 50-day moving average. Great breadth indicator became overbought, and it's turned down. Directionality is now negative. That is coinciding with the correction in stock prices. And look where we are. We have pulled back to the 200-day, all important. For the first time in the bear market of 2022, we were able to exceed the downtrend line, the gray line, and the 200-day moving average. and live up there for a little while before turning back down. Now we have returned back to that level. This is an important form of support, and we want to watch closely to see whether or not the market can find support here, see some buying activity, see large interest starting to accumulate more shares with the expectation that prices can keep going up. At this time, all we can say is that we have a large range bound condition, a trading range. Could it be accumulation? Well, if it is, it looks like it's not done yet. And that accumulation as it's pulling back into the midpoint of the range. The one thing I would say here about this pullback relative to the advance off the October lows is that we want to keep this pullback at about 1/3 to 1/2 correction of the advance up to that 4,200 area. So we will watch closely for that. The less of a pullback, the better. It shows there's good support, good demand under the market. And at this point, if it stopped here, consolidated, started to turn back up, that would be a relatively shallow pullback in an uptrend. We will have to wait to see if that's possible, if that could happen. Okay, moving on. Is there anything else I want to tell you in this chart? We'll come back to it. You've seen it before, and we'll continue to review it over time. Okay, let's clean this up. This is a point and figure chart of using 30-minute data, and this is a 1-point method, so it's sort of a swing trading chart. This light blue shaded area represents this zone right here where it pulled back to key support, and this count in this zone counted up to the 4227, 4228 area, and that showed the potential of this accumulation for how far it should likely go. And in fact, that's just right where it went to, which was the lower level of this larger count over here. Then there was an uptrending action. Look how beautifully it came up and out with a good breakout, and then went into an important uptrend on a very local 30-minute basis, formed a reaccumulation, light green turquoise accumulation count structure, exactly confirming the highs of the accumulation structure below. And so these are reaccumulation counts that confirm each other. At the conclusion of this advance, you had a very nice buying climax acceleration that occurred to conclude the advance. That is this little area right here. And then distribution formed a series of lower highs, which are these lower highs right here. And this counts down to this area of 3945, 3950 area, and confirmed by another redistribution. So look at what happened since. It's now found some kind of an important low exactly at the low of this point figure count level, and is trying to consolidate this zone, find support. Whether this is redistribution for another move, I think it's a little too early to tell. We always expect a cause to form before the next move. A cause is trying to form here. So the other question that was presented to me on this chart, a very good question, is this area here, is this all distribution? And so if we break down and after consolidating and break through these lows at this point, then I would want to extend this count and make it larger to see the potential, whether it has the potential to get to the low of this much larger trading range structure that we are currently in. Let's talk here briefly about the New York Stock Exchange. This is a series of indicators of breadth that I like to look at. We'll look at this more in the future. We look at this weekly in the Wyckoff market discussions. We're going to have a free open session on March 15th. Go to wyckoffanalytics.com, sign up. Absolutely no obligation. We don't share your information. We'd love to have you there. Many of you have attended in the past. Roman Bogomazov and I do these each week. Here, the thing we look for in this New York Stock Exchange Advanced Decline Oscillator 10-day moving average is overbought, oversold. So these conditions are, well, we actually look for three things. I look for three things. Overbought, such as right here, then divergence. Notice this, the New York Stock Exchange kept moving higher and this started to go lower, showing internal divergence from the strength of the prior uptrend. This divergence plus this overbought condition are a warning. Then a downward stride in the indicator coincides with a downward stride in prices. So three things are important to us: overbought, divergence, directionality. Oversold, divergence, and directionality at the lows. And you can see such a thing right here. Here's the lows, September, upward stride develops. This is a divergent characteristic. As this goes higher, this is a form of a green shoot. Well, now we see an attempt right here to attempt to make a low and consolidate this level. Can it hold at this zone? And it's not oversold by any means, but it is making higher lows throughout. So there is internals that are trying to remain relatively strong. Now, here's also a divergence. See, overbought at the highs, higher price in the index, lower high in the indicator, and divergent characteristics trending down. Now, we will talk about the volume attributes in a later show, but let me just point out at this time that the net up volume to down volume continues to decline after a divergence. Overbought, divergence, trending down. Okay, here's the NASDAQ. I think the NASDAQ is stronger than the New York at this time. You can see attempt to make higher lows here, a low, higher low, higher low, divergent characteristics at the peak here at the beginning of February, and then directionality is down from an overbought condition. So those are all things that we look for, work quite well for us. We talked about it in various forms in prior episodes. And now look at how sharply the up volume is dropping at this time. But the thing that is different in the comp than it was in the New York is that now down volume is dropping too. On the New York, down volume is still rising. So I believe for this reason, and also the higher lows that are being made in the net number, that this indicator is trying to be stronger than the New York and might be putting it in a good oversold low here. Time will tell, but we will watch closely. Seasonality is the last thing we'll look at today, and that is, you can see here that this is pre-election year seasonality, that January was an up month in this seasonality tool and was the case in the market. February was had strength seasonally into mid-month and then weakness. It's exactly what we got. The months of March and April are the two next best months in the year, and we are coming into March on a low, a correction low, and March is generally up, April is up into early May, and then pretty much of a trading range for the bulk of the year thereafter. So we will watch to see whether or not seasonality can kick in here and put in a low and attempt a new uptrend. Now, here's Microsoft, and this is from a blog that I wrote in 2016. You can go back and look this up. And at the time, I had pointed out that into the 2000 peak, we had a buying climax, a sharp selling climax reaction in the bear market of 2000 to 2001, range-bound condition, which looks like accumulation that goes all the way from 2001 to 2012, 2013, substantially long period of time, more than a decade. And so we identified the key points in this structure on the monthly chart at the time. We picked up this chart when it was around $58 off a 12.5 low on a spring in 2009 in that bear market. And we asked the question, is this all accumulation for an important new uptrend? Read the blog to learn more. This chart and this blog is the inspiration for today's episode. We put this point and figure chart in here at the time. I only counted this area right here, but did not count this larger area, and we are going to attempt to do that now. And so note that this is the chart that we published in 2016 and it had a nice count 63 up to 72 with a reaccumulation count confirming, and were around 58 at the time. But there was a much bigger count, a much bigger accumulation that was brewing. Well, here is the area that we counted. You can't see all the data that I counted. A little hard to get that on this chart, but I did count it, and we had an objective range off of this zone that went 161 to 169 and a half. Now, does that mean that that's as far as it can go? Not at all. And but I wanted to give you an idea of what a very large structure could do. So this, even though it's at $58, had the potential to go substantially higher at that time. This is what happened. This is the area. Now, I drew in the trend channel, which is substantial, and you should study this very closely. But look at how the chart itself, monthly bars, tells you everything you need to know about the direction of this stock. This is where we wrote the blog. So just as it was up and out of this accumulation structure and pulling back, note the very good rally off the spring low, and then the reactions thereafter become ever narrower, spread narrows, volume dries up, becomes dull and quiet, and all the best movement in the stock is in the upward direction from this point onward. So this is a classic indication of stock in strong hands, under accumulation, has been absorbed, is looking to go higher. And we talked about that at the time. And you can see here that we drew in back then these trend lines, these are backups. We call these creeks. And so we have all these creeks are being jumped, and then they're not turning back in to the prior structure. So here we are on this pullback that lasted about 6 months, pulled right back to the upward trend channel line, the oversold line, and then took off and went up all the way to $345. So a substantial advance. I would note also that in this upward stride, which we defined as these two peaks right here and then a parallel low at this point, this is a throw over, and it throws over the top of the channel, which is an overbought condition. Not in and of itself a reason to get out of the stock yet. We want to continue to be trend followers, but do note that we want to be on the alert because this was almost 2 years of advance thereafter. But when it did form a distributional top and turn back in to the channel, then it really had an important correction thereafter. Zoom in and look more closely. Here is, in fact, zooming in. You can see that this is the S&P 500 upward stride. We draw it on these two adjacent lows, intervening high, throws over, becomes overbought right here at the top. Well, Microsoft does a similar thing, two important lows, and then an adjacent high, draw the parallel, overbought right here at the conclusion of the advance. This is beautiful. And so a distribution forms at this time. We can then draw a downtrend once we have this conclusion of this March rally in. We can draw the downtrending stride and the oversold line, in the trend channel. I'm going to zoom in here in a minute and look more closely at this level. But I'd like to point out that the other thing that happened at this time is that the relative strength started to base also and is now attempting to jump up and pull back. And so relative strength was quite good as it, well, it's getting better. It's not great here yet. It's trying to make a base. Here, look how good the relative strength was in this advance into the final highs. And go back and study that whole uptrend, because what are the stocks? You might be a swing trader. You might be a short-term trader. What are the stocks that you want to traffic in as a swing trader? Do you want to traffic in stocks that are just in big trading ranges, or the very, very best robust uptrends that are out there at the time? I contend that you want to swing trade a great stock like Microsoft when it was in its mega bull and trade that, or better yet is to buy it and hold it as a campaign stock, as we just showed. But different people have different objectives in how they like to trade. That is entirely your decision. I'm just suggesting that trade the very best names, even if you're a trader. Okay, moving on. Let's go to this intraday. This is not intraday, this is daily data. Now we can start to look at the bar by bar analysis. And this is so important, as something that Wyckoff did that is unique, I think, in the world of technical analysis. So note, let's just look at a few examples, and we'll do much more of this in the future. But here, first, here is the downtrend line of this relative strength. Note how it slightly bumps over the top of the downtrend line, but respects it, pulls back as we're getting a sign of strength here into the final high with the climax, which is an upthrusting action, sign of strength. And what we really need to see after a sign of strength is the ability to be able to hold support and hold it about around the top of the accumulation area. Wondering if in fact this is accumulation. Now let's look at comparative analysis of these periods. This decline here from this August high, and I want to get my little marker back. This August high right here is a throw over of the downtrend channel. Let me point out here that when you had the throw over here, which we just looked at, the S&P had not gotten out of its downtrend channel yet. It was still respecting this downward stride. This is an internal sign of strength in the S&P. This is a very good indication right here. Give it a big plus. And then it pulls back, but it does pull back into the channel, goes all the way to the bottom, makes a new low. This is a very big decline, very weak stock at this point. So potentially a great short sale as it throws over here and comes back in, for those of you that like to do that. I don't necessarily recommend it. But here we come down, do not get to the bottom of the channel. Back to this, note that the S&P 500 not only gets to the bottom of its channel, but it throws under that, oversold condition for sure. But the Microsoft is definitely in a stronger position than the S&P at that time. So we see here an attempt to go down. There's a rally. This is a very sharp, short rally after what I think is the climax here of this big decline. Look at these gaps, ease of movement down, stops, and has a very sharp advance. That's an automatic rally. Automatic rallies occur after selling climaxes. It rallies up and then immediately returns back down to the selling climax, the prior scene of the crime, and with a big sharp decline into that low, and it holds. It holds at the secondary test and then rallies back up in. Now it's beginning to look like we're building some kind of a pausing action, possibly accumulation for a reversal, but this is cause building, which means we're early in the process at this level right here. So Very good advance. Look at how sharply this climbs up, much better than the prior advance. And then it keeps going into an upthrusting action. Thereafter has a very sharp decline, again showing that it's still range bound, but it finds support at the selling climax and then rallies sharply back up to new highs in the recovery, and that we call this a sign of strength. This point here needs to hold. We see volume drying up, all constructive. And with that, we are very close to the end of the show. Let me just give you some trend lines on the point and figure chart, and we will do more of this in future episodes. Here's the downward stride of the bear market in Microsoft. Really good signs of strength up. This is a swing trading structure here. I'll give you a count and leave you with this count. Oop. And there we go. You're wonderful for being here. Thanks for joining me in Power Charting. And you are a wonderful group of people that I love to hear from you. And we will see you next week. Take care, my friends.